Today on the Blockchain Report, Bitcoin's back up to 112K, and it might be because the Trump kids are taking a Bitcoin miner public on the NASDAQ because I guess nepotism just wasn't decentralized enough. Coinbase launches a Mag 7 and crypto futures index. Finally, a way to lose money on Tesla and Bitcoin in the same trade. And a Bitcoin author says quantum computing could crack Bitcoin in 3 years. Finally, a threat scarier than Peter Schiff's Twitter feed. All that and more on today's show. Let's go. Good morning, hodlers, lurkers, and anyone who clicked the wrong live stream this morning. Welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco, the city where robots and cars roam the streets in imperfect and chaotic harmony. Now, before we dive headfirst in today's carnival of charts, do me a favor, smash that like button the way Michael Saylor smashes the buy button every time Bitcoin dips 0.25%. And don't forget to follow RoxomTV and yours truly at Hank at RoxomTV, because even Bitcoin needs a hype man with better hair than Peter Schiff. All right, let's separate the whales from the minnows, the builders from the bag holders, and figure out who's stacking generational wealth and who's refreshing their Robinhood app like it's WebMD. Let's get into this morning's market rundown and check those numbers. Let's go. All right, so let's see how the numbers are looking this morning in the markets. Bitcoin looking better than we had been, currently back up over that 112K mark. It feels like things are starting to brew in the right direction. We'll keep an eye on that. We'll talk about that with our first guest of the day in just a bit, so stay tuned. Ethereum also feeling the love today. Nice, almost 3% surge in the last 24 hours, currently flirting with that $4,500 level. Remember, Ethereum hit new all-time highs just about a week or two ago. I think it was in the high 4,800s, low 49s. Are we ready for a rally in ETH? We're seeing Ethereum treasury companies pop up. Seems like things are moving in the right direction for Ethereum right now. Vitalik is back on his A game. And Solana certainly joining in on the fun this morning, up nearly 4% around that 212 mark. We've seen Solana earlier this year as low as I think it was around the 120s, but it has been surging as of late. Things are looking good. Right now in TradFi, the Dow Jones currently sitting above $45,000. The S&P 5 up about 0.25% this morning. Not a lot of action there. The NASDAQ currently around 21.5. And MicroStrategy, even though Bitcoin's seen a bit of a surge this morning, pretty much standing pat right around that 341 level. We're going to take a quick break, but as soon as we're back, we're going to have this morning's bull run and our first guest of the day joining us in just a bit, so stay tuned. All right, welcome back. It's time for this morning's Bull Run where we're going over the top stories of the day. First up, the crypto industry says it's one growth cycle away from full-blown mainstream adoption. And they're not talking about 1 billion users. They're talking about 5 billion. That's according to Thomas Briveau, the head of operations in France at Crypto.com, who made the claim at the Wave Summit 2025 in Monaco. Now, Prevot's exact prediction was within 10 years, we'll reach 5 billion users. At the end of 2025, Crypto.com's own report estimated 659 million people were already in the game. And Prevot says that once the next down cycle is over and the following bull market kicks off, the tidal wave to 5 billion begins. His vision is that crypto becomes ubiquitous for payments like credit cards are today. The first milestone will be hitting 1 billion users, which would cement crypto as a mainstream alternative payment system and finally bring Satoshi Nakamoto's peer-to-peer dream to life. Bitcoin as the backbone. Not Visa, not MasterCard, not those central banks. Now, Prevot isn't the only one throwing big numbers around. Analyst Willy Woo predicted that mainstream adoption could push Bitcoin's ultimate price to $700,000 per coin. The math, if investors, worldwide, give Bitcoin a humble 3% portfolio allocation, that's where it lands. But the path to that first billion users isn't agreed on by everyone. Roy Van Krimpen of OKX said there are two possible ways. Door number one, pure speculation. Like 2021, when retail gamblers sent the market up fourfold in just a few months because everyone thought they were going to be rich. Great times. Or there's also door number two, actual consumer usage of blockchain technology. We're talking payments, real-world transactions, but that requires a total change in consumer behavior, which usually takes way longer than people want it to admit that it will. Now, Coinbase's Chintan Tukaria agreed that usability is the real bottleneck here. He said beginner-friendly apps and tools are the only way grandma and the guy next door actually start transacting. So either we're one cycle away from crypto being everywhere, or one clunky wallet UX away from it all getting delayed for another decade. And Anthropic, the AI firm behind Claude, pulled off a valuation jump that would make even Bitcoin blush. The company is now worth $183 billion thanks to its latest funding round. That's more than triple its reported valuation from January when it raised $2 billion. On Tuesday, Anthropic revealed it closed a $13 billion Series F round. Iconic Capital, Fidelity Management and Research, and Lightspeed Venture Partners all led the raise, and basically every major investor in North America also showed up. Altimeter, Bally Gifford, Coatue, Goldman Sachs, Growth Equity, Jane Street, T. Rowe Price, Ontario Teachers Pensions Plan, and even funds tied to BlackRock all piled on in. Anthropic says its revenue run rate has already surpassed $5 billion. It also claims more than 300,000 business customers. That, apparently, was enough to justify the valuation explosion. And yet, Anthropic is still technically in the process of commercializing its technology. But investors, they don't seem to care. Now, Anthropic does have a crypto connection, although it's not exactly a proud one. One of its earliest backers was none other than FTX. Yes, Sam Bankman-Fried and his sex-fueled jungle den managed to grab 7.8% equity stake back in 2022. Now, after FTX imploded, the estate moved to dump its Anthropic stake in 2024. Now, back in the real world, Anthropic's Claude is already being deployed inside crypto. Coinbase uses Claude to support customers and streamline internal operations. Crypto.com uses Claude 3 via Amazon Bedrock for real-time sentiment analysis across global markets. Anthropic brags that Coinbase's deployment of Claude now serves millions of users. It processes thousands of messages per hour, and it also reduced customer service handling times dramatically. Analysts argue that AI is becoming a foundational piece of crypto infrastructure. The reasoning is pretty simple. Compliance in a 24/7 global, never-closing market is impossible without it. Currency.com CEO Konstantin Anisimov spelled it out, saying, gradual transition from human-centered workflows to embedded AI-powered decision systems. According to him, these systems help map wallet behavior. They interpret anomalies across chains. They even detect mismatches between business logic and regulatory zones in real time and at scale. So AI might not replace your financial advisor just yet. But in crypto, Claude is already replacing the army of people who would have had nervous breakdowns trying to track this stuff manually. We're going to break here, yeah? All right, we're going to take a quick break. When we're back, we're probably going to be joined by our next guest of the day. My earpiece ain't working great today, so I'm a little out of loop, but that's okay. More Blockchain Report coming right back after this.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, welcome back. Well, we got a special treat for you all this morning because joining us for the rest of our bull run here is someone who doesn't just follow the crypto markets, he explains them to regulators, educates investors, and occasionally reminds the TradFi world that Bitcoin isn't going anywhere. He's the Director of Digital Assets and Education at Quasar Markets and co-founder of the American Blockchain and Cryptocurrency Association. Let's give a big Blockchain Report welcome back to the one and only Crypto Hondo himself, Howard Greenberg. Welcome back to the show, Howard / Crypto Hondo. How are you? It's good to have you back.
Thanks for having me, Hank. It's great to be back, especially on a day we're moving up a little bit, right?
About time. Yeah, I was getting a little worried there, but I think we're getting some of that momentum going, and we're going to talk about that in just a second, Crypto Hondo. But before we do, there's probably a couple of viewers out there that might be new to you, didn't catch you when you were on the show last time, or haven't seen all the amazing things you're doing. Really quick, could you just give us a quick recap of who you are and what you're all about over at Quasar for us, Hondo?
Sure. I do a live stream show every morning with Big Beat there called Quasar Markets Morning Look at the Markets. I'm also the director of digital assets there. We have connections with a lot of the exchanges. We're about to release some new functionality. You'll be able to trade spot crypto directly from our platform. But what we try to do is we try to bring the retail trader, we try to give them all the information the institutions have. And that's what we work on really at Quasar. And at ABCA, we're working on getting blockchain regulations and using blockchain at a federal level, like we just saw with the GDP data with Pith, Chainlink, and Avalanche getting announced.
Amazing. Well, we've got a lot to talk about today, Hondo, so sit tight. We're going to read this story. I'm going to come right back, and we're going to chat about it. Sound good?
Awesome.
Let's do it. All right. So Coinbase, well, they've stitched together a Frankenstein product that bolts Wall Street's favorite tech darlings onto Bitcoin and Ethereum like some unholy lab experiment. It's called the Mag 7 plus Crypto Equity Index Futures. Think of it as the Magnificent Seven stocks, we're talking Apple, Tesla, Nvidia, and the rest of Silicon Valley's Avengers, mashed up with Coinbase stock itself, plus the iShares Bitcoin Trust ETF and the iShares Ethereum Trust ETF. 10 components in all, each given exactly 10% weight. The index will be rebalanced quarterly. The contracts will be monthly. They'll be cash settled, which is ironic considering half the people buying this will be praying for anything but cash. And the launch date is September 22nd. Brian Armstrong himself announced it on X. He called it the first U.S. futures that gives exposure to the top U.S. tech stocks and crypto at the same time, which is CEO speak for we finally figured out how to sell Apple fanboys Bitcoin without them knowing it. Armstrong also promised more products like this, part of Coinbase's grand everything exchange vision. You know, the idea that someday you can trade Bitcoin, Tesla, pork bellies, and Pokemon cards all in one app. This move follows Coinbase's recent expansion of perpetual futures, where they added XRP and Solana alongside Bitcoin and Ethereum, because nothing says perpetual quite like XRP's ongoing legal drama. So the Mag 7 plus crypto index is just the next step in Coinbase's derivatives obsession. And how did the market react? Well, with kind of a shrug. Coinbase stock closed down about 0.3% on Tuesday to around 303. Then it inched up 0.31% after hours, the financial equivalent of a golf clap. Year to date, though, the stock is still up more than 22%. The Roundhill Magnificent 7 ETF, which gives the same equal weight exposure to those tech stocks, fell 1.14% to around $59. That ETF has returned 8.62% just this year. Meanwhile, the iShares Bitcoin ETF popped about 0.33% after hours, and the iShares Ethereum ETF climbed 1.3%. Armstrong says this is only the beginning. The everything exchange means Coinbase intends to crank out even more Frankenstein derivatives products that duct tape crypto and equities together, whether investors ask for it or not. So soon, you won't have to choose between Apple, Tesla, Bitcoin, or Ethereum. You can just buy one contract, sit back, and let an index of 10 moonshots decide your fate. Because why gamble on one rocket ship when you can strap yourself to 10 and pray they don't all explode at the same time? All right, we're bringing Hondo back. Hondo, Coinbase stitched together Apple, Tesla, Nvidia, and Bitcoin into a Franken index. Is this brilliant innovation, or is it basically duct taping together two different casinos and just calling it diversification?
It's called chasing AUM any way they can. You know, that, I mean, is anyone going to buy it? Is that, I mean, I've seen a lot of these over the years. The inverse Kramer, you know, was a huge one, right? That isn't even around anymore. You know, they come and go, these things. And the reason is, if you don't know, those ETF companies, they make money on their fees for it. They're not trading it. They're just providing it to you.
Mm-hmm. So it's just kind of a shiny wrapper that they're doing to hopefully attract new investors. Is that kind of the vibe I'm getting here?
Yeah, I mean, again, why would you not just buy the SPYs, the Qs, and Bitcoin? You know, why do I want to pay Coinbase to buy them and hold them for me, all of them, and trust that they hold them?
And Coinbase, yeah, and Coinbase says that this is allegedly about creating an everything exchange. Do you see this kind of hybrid product actually bringing in new investors to Bitcoin, or is this just mostly a marketing gimmick for people who don't want to admit they're buying crypto?
I think it's a marketing gimmick myself. You know, I don't think that anyone that really wants to get exposure to the class has to do that. You already have IBIT. You have the ways to buy it from there. And what just got announced yesterday, the SEC and the CFTC partnering together to allow everybody to sell Bitcoin nowadays. So, there isn't really a reason to buy this, amalgamated system that they've put together, this ETF. And I don't think it does drive new people to the market.
Mm-hmm. And I guess a question I have, and I would love to get your opinion from your seat at the table. If big tech stocks were to stumble, do you think that this index could drag Bitcoin down with them at all? Or could maybe Bitcoin actually prove it's the stronger asset by decoupling?
Unfortunately, we haven't decoupled yet. That is what we hope to see. We should see. We didn't see it, last week, gold 3,600. We're not near our all-time high. The bottom line is the adoption curve is still against us when it comes to that breakaway yet. So we do follow tech. And for me, all the alts not named Bitcoin are tech companies. So, that's where they fall.
Yeah, and looking ahead, Hondo, do you expect Coinbase and others to keep cranking out more of these Frankenstein mashup derivatives? And if so, what's the good, the bad, and the ugly for Bitcoin's long-term price action by being involved in these monsters?
I mean, I want the native crypto companies to innovate, and that's what Coinbase is trying to do here. Maybe they might be a little bit off the beaten path with it, but that's number one. When it comes to them also, they have to have liquidity. People have to care. You can try to sell anything, and we need to see some trading pairs. I've noticed it on their perp so far, like you mentioned. They've now got Ripple and Sol. There's not enough volume to sustain them. There's been some differences I've noticed in trading, especially when Ethereum pumped on the Powell put. There was some liquidations that happened midway through that move on the Ethereum perpetuals because the order book was too thin. So, we need to see order books thicken up if we're going to see these projects work. And then the other part would be, the super app. The reason they're doing it is that the SEC also has just carved out a new niche for what they call super apps that are going to be given a regulatory sandbox that they can actually play around with to combine these products and make sure they're not going to break the system by doing these sort of connections. So that, that sandbox is going to get everybody doing some things that are a little bit different on the derivative side for sure.
Yeah, it's certainly an interesting time in the space. We'll see if it works out. I don't know. A lot of new territory these days. So we'll revisit this one in a couple of months and see how it's going. All right, hang tight, Hondo. We got the next story. We'll bring you right back here in just a second. But first, I need everyone to stop the presses because the SEC and CFTC actually agree on something. And no, this isn't satire. For the first time ever, both regulators put out a joint statement saying U.S. exchanges can in fact list and facilitate trading of certain spot crypto assets without violating the law. This covers CFTC registered designated contract markets, foreign boards of trade, and SEC registered national securities exchanges. Basically, if you're the NASDAQ, New York Stock Exchange, or CME, congratulations, you finally get to join the party that Coinbase has been throwing for years. The statement came from the SEC's Division of Trading and Markets and the CFTC's Division of Market Oversight and Division of Clearing and Risk. They said, and this is a direct quote here, SEC and CFTC registered exchanges are not prohibited from facilitating the trading of certain spot commodity products, which is regulator speak for fine, you can have Bitcoin, please stop asking us. SEC Chairman Paul Atkins called this a significant step forward for innovation in crypto markets. He said market participants should have the freedom to choose where they trade spot crypto assets, which is adorable because it was a few months ago the SEC's idea of freedom was suing everyone with a .com in their name. Atkins also promised to work with the CFTC to ensure the rules support innovation and competition. Or in other words, the two biggest hall monitors in finance finally realized they can't keep writing each other detention slips forever. Meanwhile, CFTC Acting Chair Caroline Pham already launched her so-called crypto sprint, asking the public to weigh in on listing spot crypto asset contracts on designated markets. And now the SEC has joined her on the playground, holding hands like the world's most awkward couple. The private sector is popping champagne. Alexander Bloom, CEO of 2 Prime Digital Assets, said this is basically a green light for major U.S. exchanges to roll out spot trading on leading digital assets. He added, this opens the door for even more mainstream adoption because nothing says mainstream like the NASDAQ subtly hawking Bitcoin. VanEck's digital assets researcher Matthew Seigel tweeted that the New York Stock Exchange, the NASDAQ, the CBOE, and CME will soon have spot trading for Bitcoin, Ethereum, and more, which means Bitcoin is about to go from Coinbase's favorite child to Wall Street's new stepkid. Even Gerald Gallagher, the general counsel at Psi Protocol, couldn't help himself. He wrote that the turf wars are ending and that the SEC and CFTC are rowing in the same direction. Which is true, although given how government works, they're probably rowing in circles. Now, keep in mind, Coinbase, Kraken, and Gemini already offer spot crypto trading, but because they aren't national securities exchanges, they've always lived in regulatory purgatory. And let's not forget, the SEC dropped lawsuits against those same exchanges earlier this year. So apparently the regulators went from sue them into oblivion to actually let's copy their homework. All of this comes as the Trump administration continues its big push to make the U.S. the crypto capital of the world. Trump already signed the first major crypto legislation into law with that stablecoin bill earlier this summer. And lawmakers are still grinding away on a full crypto market structure bill. So yeah, the U.S. regulators that spent years fighting like divorced parents over who gets custody of Bitcoin are now pretending that they can co-parent. And the result is Bitcoin spot trading on the biggest exchanges in America. So what's the moral of this story? Well, even regulators eventually get tired of being buzzkills when they realize that Bitcoin isn't going away. We're bringing Hondo back. Hondo, the SEC and CFTC finally stopped slap fighting and agreed U.S. exchanges can list spot crypto assets. Is this the hallelujah moment for crypto adoption in the U.S., or are we getting ahead of ourselves here?
It's a big one. I mean, this is what we've been waiting for. It's funny to me because crypto native people don't like it now. We've been waiting for institutions. We've been waiting for TradFi to come. Now that they're here with open arms, when they were fighting us, we didn't like it. Now they're opening their arms and we still don't like it. So I don't know what makes the crypto people happy.
Yeah, you'll have those purists out there that are just like not about all of these things. But hey, this is unfortunately, whether they like it or not, you could say this is a necessary evil for that continued adoption path. So like, deal with it, guys. We're hitting mainstream here. It's good news. And you yourself have spent plenty of time engaging with regulators. How big is it that these two agencies are finally rowing in the same direction, even if it's maybe in circles?
It's been a long time since they have. We saw some of this under Jay Clayton and Giancarlo he was running the CFTC and Clayton was in charge of the SEC. But it's been 12 years or so, 10 to 12 years since we saw, things put together and done together. I think it's great. I think it's what we needed, having the right rules of the road before this stuff goes on. Now, I'll be interested because there hasn't been talk yet in D.C. Is there going to be a unified order book? Or does CME got to buy some Bitcoin to trade? You got to have liquidity. Right now, the crypto natives all have their own liquidity, or market makers that do.
Yeah, a lot of unanswered questions. But again, we do seem to be all rowing in the right direction. But it makes me wonder still, Hondo, how quickly do you expect the New York Stock Exchange, the NASDAQ, or the CME to actually roll out spot Bitcoin trading? And what would that mean for Bitcoin's price in the near term, or what do you think?
Well, that's the question. On the short term, if they've got to buy the liquidity, or if the market makers that are currently in the market, like Jump Capital and Wintermute and Cumberland, have to cover that liquidity in so many different places, they're going to need more Bitcoin. They're going to need more Ethereum. It's not there. We're seeing, these institutions gobble it up, and the ETFs gobble it up. There's only so much to gobble. They'll have to pay a lot more to get mine.
Yeah. And from your vantage point, Hondo, does this guidance help legitimize Bitcoin with institutions, or was Bitcoin already too big to ignore, and this is just regulators playing catch up here?
Yeah, it's just catch up. Bitcoin already, it's big for Ethereum, it's big for Solana, XRP will fall into this. It's big for those. For Bitcoin, we were already there. That day had already come. with the ETFs. The ETFs brought it to everybody, and that's what this is going to do now for some of the other alts. You'll see the Avalanches of the world, the Chain Links of the world. What I call sort of the blue chips are really going to be, they'll be the winners on this, in my opinion, is that those blue chips. They'll get the liquidity. That's where they'll go. It isn't going to be on the coin that's, number 1,499 on the market cap. It's going to be those top 20, top 50 coins that are going to see more and more trading, and they're going to see that there has to be liquidity where there isn't right now, to provide for that.
Good to know. That's something we'll have to keep an eye out here for sure. Hondo, sit tight. We'll be right back in a second. I'm going to read this next story because CIMG Inc., a NASDAQ-listed sales development firm you've never heard of until right now, raised $55 million this week to buy Bitcoin. They did it by selling 220 million shares of common stock at 25 cents each. And according to the press release, the plan is to scoop up 500 Bitcoin with that cash. The board of directors released a very official statement declaring they are committed to a long-term Bitcoin holding strategy. They said they're building a robust Bitcoin reserve through a sound financial system to establish a solid value foundation for their investors, which is boardroom language for Michael Saylor did it, so why can't we? CIMG Chairman and CEO Wang Jihashuang added that the company will continue to expand its digital asset reserves. He even teased partnerships with AI and crypto ecosystems, naming Merlin Chain as a possible option. So yeah, they may be buying Bitcoin with one hand and playing Dungeons and Dragons with the other. CIMG's move follows in the footsteps of Strategy, which turned buying Bitcoin into a business model, and dozens of companies have tried to follow Saylor's lead by creating their own corporate crypto treasuries. Most of these treasuries are concentrated in Bitcoin and Ethereum, but in a plot twist that literally no one asked for, a growing number of firms are also diversifying into altcoins like Solana, BNB, and even XRP. Meanwhile, back in the real world, CIMG stock dropped about 3.5% on the same day that Bitcoin plan was announced. It closed at 25 cents, leaving the company with a market cap of about $9.3 million. So to recap things here, raise $55 million, buy $500 million worth of credibility with Bitcoin, and watch your stock price fall anyway. Fun world we live in. Bringing Hondo back. Hondo, CIMG raised $55 million to buy 500 Bitcoin, but their stock dropped 3.5% the same day. Do you see this as visionary treasury management or a company desperately trying to cosplay as Michael Saylor?
The first thing I did was look up their market cap when I saw the note on this, and I'm like, wait a second. You are buying 55 million, but your market cap is 9 million. How does that math work? I mean, like, how do you even get there? No, this is terrible. This is not. And do you want the guy that was in charge of this company now running your Bitcoin, or do you want to hold your Bitcoin? Yeah, I mean, I just see these are the ones that scare me. I was hoping that this was a $10 billion company that I just hadn't heard of that was buying 55 million. That's what we want to see, right? We want to see Tesla buy, some Bitcoin. We want to see Google buy some Bitcoin to diversify, to make it a legitimate asset class. I don't want to see some guy named Charlie that knows nothing about Bitcoin before the fact that he saw what other companies have done with it now and is just trying to be the Charlie come lately.
Yeah, it worries me a little bit. Like, am I going to start seeing my local corner store bodega Ahmed guy starting his own Bitcoin treasury? Like, I don't think the world is ready for that, and I don't think it would be a good ending for a lot of these smaller fish in the sea when their market cap isn't
that's what I think. You have to stress is that this isn't a good idea for everybody, and that it does have a bad ending because, again, I don't think Michael Saylor will ever have to be force selling his Bitcoin. I could see CIMG very quickly needing to force sell their Bitcoin, and then that becomes a problem on the industry.
Oh, very much so. And investors, well, they didn't exactly cheer the announcement themselves as the stock dropped like 3.5% immediately after the announcement. So why do you think Wall Street still struggles to understand the corporate Bitcoin playbook even after Strategy has proved the model? Is this just, as kind of we're mentioning here, just a bad setup for a company of this size?
Yeah, it's, I would blame Semler Scientific because they were the first to sort of do it, right? They moved from being a healthcare company to a Bitcoin treasury company, and their stock did just skyrocket on the news. And now everybody takes it. If I have a company and I don't know what the heck I'm doing and it's not doing that well, throw it into a Bitcoin treasury company. You know, it's exactly what we saw in the dot-com bubble, right? You just put a .com next to your name and you skyrocketed. That's what we're seeing now. That this is bad. This will have an inflection point at some point on the market.
Yeah, I mean, it's got me a little worried because, especially because CIMG hinted at expanding into AI. And then they're like, we're going to partner with chains like Merlin Chain. So I guess my question is, does mixing we're buying Bitcoin with we're doing AI stuff kind of dilute the credibility of the play overall? Or is this actually this new formula for investor interest, Bitcoin plus AI stuff?
Well, it's worked well for TerraWolf and Iron and, you know, some of the other CIPR, not to be confused with the CIMG, which were very successful Bitcoin mining companies who, instead of going all in like Mara has and sort of, you asked me, leveraging more into Bitcoin by becoming a Bitcoin treasury company, these companies have said, you know what, we're going to save a little bit for the rainy day because we're also going to provide AI data structure service to NVIDIA, or we're going to provide it to the, you know, these Anthropics and Googles of the world that need more decentralized, you know, space, because we do the best when it comes to getting cheap energy. Bitcoin mining companies that have been around have these long-term contracts, so that's what they want.
Yeah, it's like they're kind of trying to run a similar play, but ultimately the playbook is going to be inherently different for different companies. So I guess my question is, in your view, what separates a company that's genuinely building a long-term Bitcoin reserve from one that's just using the "we bought Bitcoin" as a press release to pump the stock? What are you looking at?
Do they have tech people behind them that are going to try to do something with that Bitcoin? So I think Ethereum's a little bit of a better measure where you look at what Bitmine and SBET are trying to do, where they're saying, hey, we're going to be that connection. We're going to take the Ethereum and we're going to maximize yield on it by putting it to work in DeFi. We're not fully there on Bitcoin. I think I do know that that's part of strategy. Strategy is to unlock that. We haven't seen it, you know, fully unlocked across the Bitcoin blockchain, you know, Lightning and other things working to do that. But the idea is, are they doing stuff that they can do better than you can with Bitcoin or Ethereum? If not, why would you buy them?
Right. That's a good point. You're almost kind of paying a premium for like the expertise or supposed expertise in that company, and that they have a steward that's directing the ship on the right course that knows better than you. You would certainly hope so, but we'll see. All right, Howard, stay put, because this next story we're going to come back and chat about in a second. It's double trouble because Gemini is strutting onto Wall Street with diamond hands and a $2.22 billion price tag. The New York-based exchange, founded in 2014 by none other than Cameron and Tyler Winklevoss, a.k.a. the guys who sued Zuckerberg and lost the Facebook movie casting call, filed for a U.S. IPO on Tuesday. They're planning to sell 16.67 million shares, priced somewhere between $17 and $19. If they squeeze the top of that range, Gemini will raise $317 million. And if you're wondering why the twins chose now to go public, well, it's because IPOs are suddenly back in fashion, like cargo pants or frosted tips. The U.S. IPO market is booming again, thanks to strong trading debuts that have investors foaming like they're waiting in line for the new iPhone. Digital bank Chime Financial and space firm Firefly Aerospace both lit up their first days of trading. And earlier this year, crypto exchange Bullish had a blockbuster IPO that made everyone else in crypto go, wait, we can do that too? And if Gemini pulls it off, they'll be the third publicly traded digital asset exchange, sliding right in behind Bullish and Coinbase. Analysts are calling the timing perfect. Bo Pei at the U.S. Tiger Securities said after Circle and Bullish went public, plus higher crypto prices, it's basically open season for crypto IPOs. And the broader market is already cozying up to Bitcoin. U.S. regulators approved spot Bitcoin ETFs last year. Coinbase joined the S&P 5 earlier this year. So yeah, Gemini is certainly catching the wave. But remember, this is the Winklevoss twins. They got rich settling with Zuckerberg in 2008. They took that payout, dumped it into Bitcoin, and became some of the first crypto billionaires. That's why they're called the Bitcoin twins. And now they're trying to turn that origin story into a NASDAQ ticker symbol, GEMI. Goldman Sachs and Citigroup are leading the deal because, of course, they are. Nothing says crypto revolution like being underwritten by the same banks you were supposed to disrupt. So, yes, the twins who sued Zuck got memed as the Bitcoin twins, slapped their name on an exchange, and are now asking Wall Street to value them at $2.2 billion. Because in 2025, the best way to prove you won the Facebook fight is apparently with an IPO. Bringing back Hondo. Hondo, Gemini is aiming for a $2.2 billion valuation in its IPO. Do you see this as a genuine sign of market maturity, or are the Winklevi twins trying to turn their Facebook settlement into a NASDAQ ticker before the window closes? What do you think?
I'd actually say, look how far they've fallen. You know, Gemini at one time was a major competition for Coinbase and, you know, looked to be on top of the world. And now, you know, 2.2 billion in an IPO, you know, versus almost 80 billion, I believe, for Coinbase shows you how far they've done that. I blame the DFS in New York for that. They've chosen to, you know, to pony up in New York City and try to be the DeFi answer to TradFi, so to speak, the Winklevoss twins. And I think it's backfired a little bit, but I do think it's going to be a successful IPO for them.
Yeah, I mean, the timing has to be considered here. I mean, the IPO market is hot again, and with Chime and Firefly popping on their debuts and Bullish going public earlier this year, do you think Gemini benefits from this rising tide, or are exchanges still harder sell given the volatility that we're still seeing in the industry?
I think people are going to look at Gemini, see that price, and they're going to buy. I don't know if it's a good buy or a bad buy personally. I'd have to look at their numbers. You know, what we don't realize is they do pretty well outside of the U.S. In the U.S., where they have that extra regulator between them and us, which is the DFS, the Department of Financial Services, or Division of Financial Services in New York, that limits them a lot. They've done a pretty good job in Europe. They're one of the more dominant exchanges in Europe, and we saw that's what Bullish does their business, and you saw how they took off. So I do think there's an appetite. I think that they definitely are hitting it at the right time before Kraken gets theirs done, so it won't get hidden behind that. You know, and I do think when it comes to that connection with TradFi, they are one of the answers. They're the people that do have those friends on Wall Street where maybe Brian Armstrong doesn't.
Yeah, they certainly have some credibility there, and they also have credibility in the fact that they're literally called the Bitcoin twins after betting their Facebook settlement on BTC. So, which begs the question, in your mind, Hondo, does their credibility as early adopters still carry weight with those traditional investors, or does Wall Street now care less about these crypto origin stories and more just about balance sheets?
More about balance sheets right now. I mean, I think having a little bit helps. They are some of the bigger names, you know, and everybody knows them from the Facebook movie, or from, the Facebook fame. So I think that can only help the IPO itself this time. The difference is going to be in the underlying, assets. Do they know how to manage them? Do they have a plan to grow? Do they have answers for what they've conceded to regulators already? Because they're one of the ones that don't have, futures yet, where Kraken and Coinbase both do. So they've got an upward battle ahead of them.
Yeah, and what's kind of funny about this, Hondo, I had a good chuckle, is like you have Goldman and Citi are leading this deal, which is ironic since these are the same banks crypto is supposed to disrupt. Do you see this as crypto being co-opted by Wall Street, or is this crypto finally getting its seat at the big kids table?
It's a little bit of both. I think it's that gray area. Everybody wants to be in the black and the white. I'm a moderate in the middle of some of these things, and somebody had to underwrite it. Quite honestly, usually, Goldman, that is an interest. Citi's a very interesting one because they've been fairly negative on crypto. I would have thought one of the banks that was more crypto friendly might have been the connection, but Goldman Sachs has done a lot of these deals and was heavily connected to Coinbases that was successful. So that's not a surprise. And again, there isn't a crypto native company that can bring them public.
Right. And if Gemini were to pull this off and joins Coinbase and Bullish as publicly traded exchanges, Hondo, what do you think that means for competition going forward? And does it ultimately strengthen Bitcoin adoption by pulling in even more institutional capital?
I think it does help. I do. And I think that what I'm curious to see is, based on this in your last segment, is do we start to see a US-based order book? Is there a way to connect some of these order books together, is there a U.S. order book? Does the U.S. regulated entities start to combine? And because you could do it in the world of DeFi, where you could use it as sort of like Uniswap does and use an automated market maker system with them all connecting together. So it's going to be, what do they do from this stage is going to be the question. How do they separate themselves from TradFi?
Yeah, that'll certainly be interesting, especially with all the detractors out there. And one of them I want to talk about in this next story. So hang tight, Hondo. We'll be back with you in just a second, my friend, because Peter Schiff got on X to once again ask the question that literally nobody asked him to ask. And that was, if Bitcoin is digital gold, why is it still 13% below its all-time high? Especially with all the hype, with the government backing, with corporations piling in. Why is it still behind gold, which is currently partying at record highs? Well, Schiff's argument, if Bitcoin is supposed to be a reliable store of value, why hasn't it already blown past its November 2021 peak? Well, he's been skeptical forever, and he's not changing now. In fact, he recently predicted Bitcoin would fall all the way to 75K, so investors could sell high and repurchase lower. Solid financial advice if you hate money. Meanwhile, gold prices are soaring, and Schiff, well, he's loving every minute of it. He's even tied the whole situation back to the 1971 U.S. exit from the gold standard, because apparently everything comes back to Nixon. Now, in his world, America's ballooning national debt proves gold is the safe bet and Bitcoin is the bubble running out of air. At the same time, or at the time he posted, gold was trading around $3,500 an ounce. That's up more than 31% year to date. Bitcoin, meanwhile, at the time was around 108,000, down about 5% over 30 days, but still up nearly over 16% on the year. But when your personal brand is Bitcoin hater, you don't acknowledge details like that. You double down, because the only thing more fragile than Peter Schiff's opinion of Bitcoin is Peter Schiff's ego if Bitcoin keeps proving him wrong. Bringing Hondo back. Hondo, Schiff is back on X, asking why Bitcoin is still 13% below its all-time high if it's digital gold. Do you think this is willful ignorance on his part, or does he actually have a point that Bitcoin hasn't outshined gold in stability yet?
Come on, Peter Schiff is a one-trick pony. He might as well be part of the WWE. This is all scripted. He makes more money attending Bitcoin conferences than he does from his gold business. I mean, they took away his gold business in Puerto Rico. He's a meme at this point, and everything's based on Bitcoin.
Yeah, he's such an interesting gold bug provocateur. He's just kind of fun to talk about. I remember seeing him at the Bitcoin conference just walking around. He even set up his own booth, which I gave him credit for having the balls to do that, considering he's walking into the lion's den at that point. But yeah, he's always fun to talk about. Well, Hondo, I know our time here is coming to a close, but before we go, I really want to talk really quick. Just give us a quick breakdown of what you guys are doing at Quasar, because I know you guys have that incredible platform that is really democratizing information for investors everywhere, and where our audience can go to check out more about all the amazing developments you and your team have going on over there.
Absolutely. QuasarMarkets.com is the website. QuasarMarketsLive is our YouTube. As you mentioned, what we try to do is we try to bring the tools, whether they be from technical analysis side, from social media side, using AI and stock twits, companies like that. We don't produce anything ourselves. We tie it all together. So you can go to one site and get your charting, your social sentiment, your on-chain data. You can do your trading there. You can buy gold. You can, buy Bitcoin. You'll be able to trade, both of those soon enough here on the exchange through there. But what we try to do is we bring institutional information to retail traders and try to bring it to the masses. Try to get retail traders the ability to trade like the professionals.
Yeah, and it's super affordable too. It's like $15 a month. I mean, in this day and age, information is everything, and access to that information couldn't be more important than ever. So we certainly appreciate you and your team's efforts at democratizing info for the little guys out there, because we'd be lost without it. Hondo, always an absolute pleasure having you on the show. Thank you so much for joining us and talking shop today, and we hope to see you again really soon, my friend.
Absolutely. Thanks for having me. And we're running today. We're getting ready to run.
Yeah, we are, baby. I love it. All right, Honda, we'll catch you real soon. We're going to take a break here on the Blockchain Report. We'll be right back with more, including our resident chart shark and crypto wunder, Gianluca Pagano, who's going to help us read the tea leaves and let us know where he thinks Bitcoin is heading next. Stay tuned.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Oh, it's beautiful, Hank. This is not financial advice.
All right, it's time to see what the tea leaves are telling us with my good friend and resident chart shark, Luca Pagano. Luca, welcome back to the show. Always a great time having you.
Hank, how's it going? It's a pleasure to be here, so thank you for having me.
Luca, can you hear me?
I can hear you perfectly. Can you hear me?
Mike's on. It's a live show. It's my
hello?
earpiece? Luca,
Are you there, Hank?
you hear me?
Yeah.
I can't hear him. Trying again. Yeah, I'm turning it back on. Luca, can you hear me now, bud?
Hi, yeah. I can hear you.
There he is. I got him. I am. Sorry about that, guys. It's a live show after all. Luca, good to see you, buddy. How are you? Everything well?
I'm great, Hank, and I'm also happy for how the chart looks like today. So amazing day.
Yeah, we're excited for a little bit of good news. Bitcoin experiencing a little bit of a rebound, it seems. We were kind of dwelling in those high 107, 108, 109 arena. Nice spike back to 112. What are you seeing right now? Do you think a new lift or takeoff is on the horizon? What are the charts telling you?
Yeah, I mean, honestly, I think that we're trying to find the floor for me on BTC. Like, what do you wanna see, Hank? After the pullback we've been experimenting is basically you want pessimism all around. I think we're getting there, and for me, what it would be amazing, honestly, is for this to be the deviation we wanted, for trap shorts to get aggressive all over here, and if we can close for me the daily above $111,000, for me we're getting there. Honestly, I mean, it's a tough place because you definitely don't want to see rejection here. And why do I say this, Hank? Because as we saw last week, $111,000 or mid $111,000 is a very important level, because we had less highs there rejected. We got this beautiful pullback, which then resolved in a second leg up, and then we got the first pullback of these all-time highs was exactly that point, as you can see in the green mark, and the third pullback was exactly that. When we saw the amazing leg up like 4% in a day, and now we're pulling up again. So why is this an interesting point? Because if we have this breakdown, which I think was pretty interesting, we had a minus 3.7 breakdown on that level exactly, and we can close back above that point. For me, this is an indicative of things getting definitely on a reclaim level, and we expect to go up, if we can close above that.
Love to hear it. And what we've seen, it seems like today's been kind of a favorable day in the broader crypto market, especially when I want to go and talk a little bit about Ethereum right now. It's currently up almost 4% on the day. And I feel like over the last couple of weeks, we've seen a bit of a shift, right? It seems like a lot of money has been moving from Bitcoin, especially on the corporate side, making its way into Ethereum. Ethereum briefly hit new all-time highs, although they weren't super high. What are you seeing right now? Is a lot of money still rotating from Bitcoin and going into Ethereum, maybe in chase of some higher alpha plays, or what are you seeing on the Ethereum end right now?
Yeah, definitely. I mean, I think we can definitely see Ethereum doing something interesting because, in the Ethereum history, we have this clear. All-time highs, that got rejected once, twice, and now we see a breakthrough, and a pullback to that interesting level, right? So what I'd expect to do right now, honestly, is see how Ethereum is basing right now here. this is a very interesting candle. It's honestly, it's much bullish than Bitcoin in terms of structure. We've seen this hang before, where the FBTC started shaping towards the upside, which we'll have to see if we want to stack more BTC as well. Solana doing something interesting as well. And I think this day, if we can close like this, it is very indicative that we should see, these all-time highs. To be honest, I mean, I would expect that for sure. If we see the latest all-time highs here, Hank, all-time highs are basically standing on basically where we landed or where we rejected it before. It's let me grab it. Almost there. There's the all-time highs, right? So I think it's a very interesting point to be, maintaining these levels. For me, it's very bullish. I mean, I don't see why Ethereum guys and buyers would be, worried about this price action,
Yeah, no, it's setting up like it's looking pretty good for Ethereum going forward. What's it looking like on the Bitcoin dominance chart right now, and how is that coming into play with the money that's seemingly coming out of Bitcoin and rotating elsewhere?
Yeah, this is an interesting chart because I think we honestly we've seen it very cleanly. Remember when we got the rejection? Let me just zoom out a little bit. Sorry for the movement. We marked, remember, a couple weeks ago, the 63.33% Bitcoin dominance here together, Hank, and we said, hey, it would be beautiful for the alts out there if this is a deviation, remember? And then we had this amazing weekly, amazing for the alts fans out there, we had a weekly of almost minus 6%, right? So when this happened, we said, hey, what you definitely don't want is getting up above 63.33 because that would indicate, that Bitcoin's not done cooking in terms of domination, right? And we expected this drop down till the 58 area, which was the second support, which I think it honestly went through perfectly. An outcome that I would love to show you, Hank, of course it's not a secret, but if we see the chart of Sol BTC in the daily, I mean, I was analyzing this morning, that's why I have this, but it's been amazing, it's been basing very, very nicely, Solana against BTC, and we're breaking definitely this base. We should be expecting higher prices, honestly, for Solana in terms of Bitcoin, if we see in terms of USDT, much more even. So I think, altcoins overall are looking very good, Hank. That's my view. We should expect prices to go higher if, and almost remember who is the king here, if Bitcoin can hold the amazing, what we mentioned in terms of this $112,000 or 111 meets $1,000, right? That's for me the key here.
Yeah. Very nice. Well, Luca, we got to let you go. Before we do, though, really quick, 30 seconds or less, what are the numbers we need to be looking at for Bitcoin before our weekly close to you signify that we got some more upward momentum and trajectory going forward?
Yeah, I mean, for me, even nearer the weekly close, Hank, I will. If we can close above $112,000 today, I'd expect to be pretty quickly on the zone of $117,000. Of course, people remember this is not financial advice. I with my friend Hank just analyze the markets and try to give you some perspective on what I'm seeing, at least opinions only,
Of course. Well, Luca, as always, we certainly appreciate your time, your insight, and expertise in looking at the charts with us today. Before we let you go, if people in our audience want more of your great chart analysis, where can I send them?
I mean, we will be analyzing definitely this movement on Look at Roxom, if it gives, and see you there. Thank you, Hank, for having me as always.
Rock and roll.
Bye-bye.
Pleasure is all mine. We'll see you soon, Luca. All right, we're taking a break, but when we're back here on the Blockchain Report, we have an in-studio guest, none other than financial reporter and journalist extraordinaire Christine Lee will be joining us. So stay tuned. All that and more coming up after this. I'm good, right? Okay. All right, welcome back. It's time for today's deep dive. And our guest today has anchored global business news from New York to Toronto, covered everything from the halls of power to the wild west of crypto, and even has a Pulitzer Prize on her resume. Not bad. She's interviewed market movers, broken down Bitcoin for mainstream audiences, and helped shape the way millions of viewers understand this industry. Let's give a big Blockchain Report welcome to Christine Lee, everybody. We are very excited to have you.
Oh
It's
my
so
gosh.
early. How are you doing?
What an intro. I love it. And I love the studio. I mean, folks, you got to come here in person. There's like gorgeous bulls, there's fuzzy animals, there's a gracious host and awesome people at the door.
Yeah, I think we're
love
going to
it.
keep it. I think we're going to keep it. And yeah, Timu approved all around. You guys do great. Although with the tariffs,
Timu
Timu is probably not
approved.
going to be quite the sell that, or have the sell that it was. But we're super happy to have you here, Christine. You have had a really interesting career arc yourself, right? I mean, you were in law, okay, and then you were called up to the bar of Upper Canada. Like, what made you pivot from that to this, what you're in today as a journalist?
Yeah, so I started off doing law, but I mean, pretty much as soon as I became a lawyer, I thought, I think I'm just meant to do something else, and that specifically journalism. I mean, law can keep you at a square, siloed life in certain respects. I mean, at least where I was at. I mean, my desk was a square, my office was a square, and I was siloed into certain cases and boxes that was very square shaped. And I just felt, I want to do something more. And to me, what was interesting was journalism, because it was tracking what was happening that day. And it was attracting communities to come together and just being a part of history and seizing the day. That was what attracted me to journalism eventually. And so for me, it was a huge career pivot. It was a risk, but it was something that I just had to do.
Yeah, and I've heard that from other people that have been in the law field. My mother was an attorney for like a second, but realized, sometimes like that's the kind of industry I feel like they want you to fit in, when sometimes you're just not meant to fit in, you're meant to stand out.
I mean, there are a lot of different lawyers out there,
Sure.
and so some of them, I'm sure they find their niche and they make it great. But just for me, in my corner of law, it just wasn't where it was at, and I felt that journalism was going to be a more suitable path with respect to my personality, which is I get FOMO, fear of missing out. I want to be out in the community, and that's really what I found. I mean, no day is the same. One of my first jobs was covering politics at the Massachusetts State House, and every day we had stakeholders from education, from military, from healthcare, all coming in to talk about their stories, what they were interested in. And it was just really incredible to be part of that community and report on it every day.
Yeah, it sounds like you really like to be in the thick of things when they're
I
moving
do.
and shaking.
I do. That's why I'm here.
That's right. That's
Hank.
right. Well, it seems like it served you well. I mean, was it ProPublica? You were part of a team that won, was it a Pulitzer Prize for
Yes,
doing
yes.
a story about evictions in New York?
Yes,
What was that about? Tell
yes.
us about that a little bit.
So for a period of time, I worked with ProPublica, which is an incredible newsroom. And I mean, with the ever-changing landscape of media right now, I gotta say they're one of the last remaining true American newsrooms in the world that really deep dives into stories. It remains independent and gives you a very critical look or a critical eye on issues happening in the world right now. And I mean, that is the glorious thing about ProPublica, is that you can have the time to do investigative news, which is almost extinct in the media landscape, because now we've got to go boom, 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 boom. But
Right.
they really take the time. I mean, I spent about a year and a half on this particular investigation on evictions without convictions in throughout New York City. And just through looking through thousands of cases, I personally profiled about 300 of them. And a colleague of mine, Sarah Riley, most of the credit goes to her. She was the one who first started asking questions about, well, why are these people getting evicted? And did they have any public defenders in case? And oftentimes no.
Yeah.
And just kept asking questions like that, and eventually found a pattern of mostly minorities and minority neighborhoods being evicted for crimes they were never convicted of, and out of their homes. And we track this as a certain pattern, which caught the attention of the city hall, which led to sweeping changes to the law to prevent people from being evicted for, well, really no reason.
Yeah, I knew that for a year and a half, huh?
Yeah, profiling this, going from each borough to each courthouse, arguing with law clerks, going to the basement dungeons, going through boxes of documents, and just trying to find who these people are and give them a face and a voice.
Wow, and that sounds like for a year and a half, that must be, you're dealing with a lot of really complex and probably oftentimes controversial things. How did that relate to you eventually segueing into reporting on like the crypto industry? Because I feel like there's some similarities there.
Absolutely. I mean, the key thing is you have to be curious, persistent, and really that transfers into all aspects of journalism, whether it be investigative news, crypto, finance, and whatnot. And since I was in New York City in the time, I mean, it's the financial capital of the country, potentially the world, one of them at least. And so I often did cover finance or in New York, and just being curious led me to question and explore Bitcoin and the whole crypto space. So I have worked with Reuters and Bloomberg in the past, and especially with Bloomberg, you know, oftentimes we'd get stories, and this was around 2014, 2016, I forget the exact year, but I remember the Winklevoss twins coming in and they wanted to launch a Bitcoin ETF. And I remember thinking, this is interesting.
Yeah.
I thought Bitcoin was a passing fad because at the time there were previously other attempts to create digital currencies, like folks may remember David Chaum's eCash and other iterations. And I thought, oh, Bitcoin, they probably tried again. We don't know how long it's going to last. But when I saw the Winklevoss twins coming in and wanting to institutionalize it with an ETF, I thought, okay, wait a second. Like, this is interesting.
Yeah.
And it was asking questions from there. And so at the time, the price of Bitcoin was $400. And I remember thinking, wow, it's like a share of Apple. And I thought, but Bitcoin has no fundamental value, and Apple is a company making iPhones and et cetera. And so just keeping that mind of being curious, exploring, and that was my rabbit hole.
Yeah.
Just continuing, well, okay, then why is it at this price? And learning more about the Bitcoin community, attending events, and eventually I started hanging out with a lot of libertarians.
Yeah, that's what kind of happens in this space.
Bitcoin folks at the time, and I was really attracted to contrarian thinkers, and so I just loved hearing what they had to say about finance, and even though they might look crazy or what have you, what they were saying was totally legit, was totally logical, and in that sense, I was magnetized. I was really interested in learning more about Bitcoin, particularly. And it's the more we talked about the economics of it and the community and the whole genesis, it kind of made sense to me. And I thought, oh, this is going to be big. And so I wanted to learn more. And eventually the ICO boom happened, and Bitcoin was, encouraging all these a flurry of other crypto projects to arise after Ethereum, et cetera. And so there was just a spark of this incredible innovation, and it was young people. And it was just fascinating and interesting to hear all these ideas. I mean, the first time I heard about crypto kitties, that these digital cats
I know crypto
were selling for $10,000, like I was floored. Like I had to sit down. And I was like, what just happened?
We're all still floored by all of this. Okay, let's
yes.
go right straight
Like,
here.
what is going on? And I was just really taken in by this crazy, exceptional, incredible world.
Yeah, and as someone who was there and was reporting out back when Bitcoin was $400, are you surprised where we are at now? Because that was 2014, you said, Ish, right? So we're over 10 years past then. Bitcoin is in the six figures. Are you surprised by that we're there now? Or is this kind of what you thought back then? You were like, it's eventually going to get there. Because I've been in the space since 2016. I still have to kick myself sometimes to be like, wow, we're at 6 digits now. Is that surprising to you?
I think we're all surprised.
Yeah, I think a little bit.
I think we're all surprised. And at the time, $100,000 would have been a moonshot.
Right.
And the fact that we're at 100,000, I'm just a total believer. Now, $1 million by 2030, I totally believe it. So, I mean, everything is, and it takes a community to do this. I mean, a community has gone together and said, Bitcoin's going to be $100,000. These are the reasons why. We want an independent currency, untouched by other countries, other governments. We want a sense of anonymity, though I know, I mean, it's pseudonymous.
Right.
So it's a little gray area there.
Sure.
But we want a digital currency that is trustless, that is unconfiscatable. And so, I mean, the narrative has been pushing and galvanizing this community along, and they're winning. So, so they're, what they're saying, even though it sounds crazy, is becoming a reality. And so I believe it.
Yeah,
and having been told I'm crazy
these are my people.
by many people through the years since 2014 to 2016, when I started like really loving and covering crypto and Bitcoin. I mean, that was hard, but having pushed through and seeing where the community and where Bitcoin is at right now, it's like, folks.
Yeah, I told you so. I mean, even at Harvard coming out, they had a paper, what was it, years ago, saying like Bitcoin will likely to go back down to 100 before 100,000, yet here we are. And then Harvard just bought $139 million worth of Bitcoin ETFs or something. So.
Yeah, everyone is eating their words,
Oh,
right?
yeah.
And so, I mean, the community is winning. The community is doing this. They're driving this. And if that stays strong, then anything's possible.
Yeah, no, absolutely. And I feel like you kind of saw the writing on the wall, though, because you made the big jump to CoinDesk, right? You're the lead anchor there, hosting the First Mover show all about Bitcoin. Like, what was it that gave you that conviction to be like, I think this is where things are going next, and I want to be a part of shaping that?
Well, it was a jump. I mean, I'd say while I was at Bloomberg, we could do segments, certainly, on Bitcoin, on cryptocurrency, but I mean, hosting your own show, that wasn't going to happen, and it still hasn't happened. I think CNBC has been a little bit more open, and they've created a crypto show, and they actually hired a lot of reporters from CoinDesk, and so, and actually Bloomberg did too, during the last bull cycle. And so what was your question exactly? It was
Oh, no, it was just like, what gave you the conviction to make the leap from Bloomberg to
And
CoinDesk?
so I just wanted to cover this subject that I was so deeply curious about, that I wanted to explore. And I just saw that this was an opportunity to do that.
Yeah.
And it was fantastic. I mean, it was such an exciting time period from about 2020 on to until now. And it was, I mean, from at the time, I'd say Bitcoin was still under $20,000. So when it surpassed $20,000, that was a huge thing, and it went up to about 69,000, and that blew everyone's mind. And then when the Fed started raising rates, and it was a risk-off market, that's when we saw the Terra Luna ecosystem capitulate, and that really was the first domino that led to the deleveraging of the rest of the industry and markets, so to speak, that culminated with the fall of FTX and Sam Bankman-Fried's FTX Alameda empire.
Right.
And to have covered, and CoinDesk had a key role in setting that fire,
kind of in motion
because of the reporting of Ian Allison in reporting the balance sheet, blurred lines of the balance sheet of Alameda Research connected to FTX. So that they were just so loaded with FTT token. And I'm sure there are going to be more stories like that in the future.
Yeah, it's inevitable. And, you know, people will talk about these things that happen, Celsius, FTX, whatever, and they'll label it as like a crypto problem or a Bitcoin problem. It's not. It's a people problem. People are always going to look for ways to skirt the system.
The technology is neutral is the common phrase.
Exactly. Was that kind of weird to be reporting on or being involved in breaking the whole FTX debacle, knowing like we can break this and that's great journalism, but also the industry that I'm in now is probably going to take a pretty big step back because like that harmed the reputation in the short term, right? Was that kind of like weird? It's like, oh, we want to break this story, but like also like this is not good for my industry. Like, what is that like trying to balance that journalistic integrity, but also knowing like, you know, crypto is the hand that feeds me a little bit.
I think most journalists know and can empathize that we don't go into journalism for money.
Totally.
It's not going to be this, landfall
exactly.
when it comes to making money. We do this because we're very passionate about we're learning and exposing stories or shedding light or educating. We're passionate about, giving a voice to the voiceless and being an educational tool and trying to help people. Like, really, journalism is a service. Someone asked me about this the other day, and I would compare it to something like the police force or
like
doctors, teachers.
Yeah, it's a little selfless.
Like we are a service. We're not going into this to make a ton of money. Definitely not.
Not usually, no.
We're doing this because we want to help people. And so in that sense, when we were breaking this, we were elated. We were really happy that we were able to shed a light on one of the biggest frauds in financial history. And because we want this industry to grow. And even though it's going to have these huge pains, I mean, you need to go through that so that the folks who are doing things right will continue to build a industry with a strong foundation. So even though we saw a massive collapse of the industry for a moment, I think eventually we're going to make an industry that has a strong foundation and that can survive these cycles. And that's our goal, is to we want to do things right. We want the good guys to win. We want to get the bad actors out. We want to shed a light. We want to expose them, and we hope that we emerge stronger from it. So the joke in the CoinDesk newsroom is, oh darn, Ian wrote the story that's going to get us all fired, and we were joking at the time, but it actually turned into a reality. And CoinDesk was eventually awarded the Loeb Award, the most prestigious award in business journalism, for the reporting. And our editors, our reporters said the same thing when they accepted the award, is that we wouldn't change a thing. That's even amazing. Though basically from that, most of our editorial reporters and editors were laid off following the acquisition and sale of CoinDesk.
Yeah, I mean, it's certainly a noble pursuit when you're sometimes having to do things that might not be against your best interest personally and professionally, but you know you're doing it for the greater good. And we need those kind of things because those kinks that we're going to naturally experience along the journey of Bitcoin's development need to be worked out before it can kind of fulfill this grand vision that we have as this new kind of monetary system. But with that being said, as someone who's innately curious, and that makes for a great journalist, and usually any kind of good Bitcoiner is innately curious. They have to do the research and learn it themselves.
Trust, not verify.
Right. Yeah.
No, wait, verify. I'm
Don't
mixing
trust,
it up.
verify?
Yes, don't
Yeah.
trust, verify. There you go.
But to your point about being curious, you've gotten to talk and interview some really amazing people in the space, builders, investors, policymakers. During your time of interviewing all these really influential people in the ecosystem, are there any people that stick out? You're like, man, that was a really great interview, or I really enjoyed speaking to that person or their point of view. There's got to be a couple.
So many. I love talking to Michael Saylor. He's just a quick thinker. He's so engaged and so intelligent, and he can really break down the economics, the balance sheets, the philosophy, the numbers of Bitcoin and its trajectory, which has always been fascinating to me. Another one I find interesting was Tim Draper, which I did earlier this year. He also is an early Bitcoiner. I think he bought like 30,000 Bitcoin at an auction.
Yeah. I remember reading about that.
Yeah, early on. And at the time, people thought, oh, he overbid, because he overbid. He overshot the bid price. And everyone thought that's way too expensive. But
Right.
I mean, now,
He's laughing now.
he's laughing at that. And plus, he has really interesting ideas just on other things like artificial intelligence. We had a conversation where he was telling me that one day we'll be able to understand conversations from animals, and I was like, what?
I've heard with AI that's like shockingly close. I don't think I want to know what my animals say to me.
Yeah.
It's a little too close.
And he's been experimenting with investments in genetics, so the woolly mammoth or the woolly mouse,
Right.
and whatnot. And so, and just what, again, and this goes to my interest in Bitcoin, is just learning about these crazy ideas out there and learning, okay, well, tell me about what led you to these crazy ideas. And it turns out it is legit, it's logical. And so that's what is interesting to me.
And when you've interviewed people like Michael Saylor, like Tim Draper, these really influential, kind of forward-thinking people, what's kind of the through line you see that ties them all together? Like, to be in the Bitcoin space, especially early on, you have to have some kind of element of foresight as to where the world is going as opposed to where it is. Did you notice any common threads amongst a lot of these people in the crypto Bitcoin ecosystem that kind of tied them all together? Is it an innate curiosity of things, willing to not necessarily accept the status quo and always think there's something better? Like, were there any through lines with them that you kind of saw, patterns you saw over your course of all these interviews with all these really amazing people?
You have to be a maverick. You have to be someone who goes against the grain, but because you really believe in something. Change doesn't happen because you're following the status quo. These are people who have a vision of where things will go, but they're also willing it to happen.
Right.
They are the force of change themselves. I mean, they could be completely wrong, and they would be the first to say, I could be wrong on these.
Yeah.
But they have such conviction and execution ability that they're going to will this fantasy into existence.
Yeah.
And so I would say that is a common thread, that they are going to make it happen. Not just they think it'll happen, they're going to make it happen.
Yeah.
With their investments,
Right.
with their strategy,
Their strategy, pun very much intended. Yeah.
with their community that they're building.
Yeah.
So I would say that is a unifying factor.
That makes sense. I've always kind of envisioned that Michael Saylor is like the world's greatest manifester. I think he
Yes,
goes into his bathroom
that's a good
every
way
night.
of
He's like,
putting it.
Bitcoin to 1 million, Bitcoin to 1 million.
He's got the
making it
memes.
happen. He
He's
does.
got the memes to yeah.
What
make
do
it
you
happen.
think of those memes? We show those
Oh,
on
I
the show
love
a lot.
them.
They're great. You
I
think it's
love
him or is it an
them.
intern? that's doing these.
I mean, a picture is worth 1,000 words, right? And I think
Yeah.
he understands that very well. And so when you see the pictures, I mean, they just say so much that then you're like, I get it, Bitcoin to the moon. Or
Right.
I get it, Bitcoin to Mars and whatnot. And so it really illustrates, and I think for people, I mean, you've got the posters here.
Oh, yeah.
You've got,
You got stickers coming off the walls like a.
I mean, that
glue.
ingrains in people. They may not remember the philosophy or all the intellectualizing that you can do, but they
Right.
remember the picture. Some people, they remember the picture.
Yeah.
And that is a driving subconscious force for many folks.
Yeah, and you know the whole crypto ecosystem, it seems fundamentally different than traditional finance in that there is kind of this, dare I say, fun element to it. Like meme culture has been huge in the crypto industry. And it kind of begs the question for me, you coming from Bloomberg and Reuters, then going to CoinDesk, what do you feel like was missing from more traditional news outlets in terms of being able to cover this space appropriately that like CoinDesk was getting right during your time there? Because they are kind of different things. Traditional finance is very buttoned up. There doesn't seem to be a lot of room for kind of quote unquote fun. But in crypto, that doesn't seem to have ever been the case. Like it is kind of fun. There are memes, like people have fun with things. Like what was the difference? Did you notice that difference going from Bloomberg and Reuters to CoinDesk at all? Like how you guys covered it?
Yes.
Yeah.
I mean, I would say the ethics of journalism at the time when I was at CoinDesk was similar to the traditional media outlets. The ethics, I would say.
Okay.
But the coverage was different because we wanted to cover crypto. We wanted to educate people on Bitcoin, and we wanted to, yes, talk about all these different projects, protocols that weren't getting much attention at the traditional media outlets. But I would say, yes, when you're part of a bigger corporation, there's definitely processes and bureaucracy, and at CoinDesk it was definitely smaller, and our editorial operations were able to be innovative in exploring different multimedia. So I mean, for a short while, I did a Snapchat series, and we did an NFT series, an animated NFT series. We were able to explore, like people could pitch ideas and they could just run with it, and we could publish it. So I mean, in that sense, we were able to capitalize on different mediums, social media, multimedia, print, etc., and explore, create in those kind of ways, which for journalists was really liberating and rewarding because we could reach different audiences in that way. And I guess that was the point at my time when I was with CoinDesk TV, was we wanted to reach people on social media, on digital, and on satellite television to create a visual medium for people to watch and learn about crypto and Bitcoin.
Yeah, I think with like maybe a smaller outfit, you can be a little more nimble, right? To adjust and change the times and take bigger risks.
And we're moving so fast with the times right now, with AI, with the new mediums that we're seeing.
Yeah. And so when I was doing my due diligences on you, I saw you have traveled a lot. It was like over 70 countries or something, which I find really interesting, especially as someone who's been in the Bitcoin crypto ecosystem. How have you seen Bitcoin specifically treated differently in other parts of the world as opposed to here in the United States? Because if I look at like South America, for instance, it seems like they have such different needs and use cases for Bitcoin than we do here that people here don't understand. What do you think people in the United States are missing about Bitcoin right now that other parts of the world are very much getting?
So, I mean, especially in countries like Argentina, Nigeria, places where you have volatile currencies. Yeah, I mean, Bitcoin is a saving grace. It's being used for what it was created for, a currency, a digital currency, divorced from governments, from the government, the politics of whatever, is du jour happening. And so it's a system to opt out of that and to still keep their savings. And because I mean, most people are not dealing with the governments and they just want to have bread on the table at the end of the day, or they just want to have something to eat, get their family, together, and a roof over the head. And so Bitcoin is a way to escape the politics and the volatility of that. And I guess in the United States, I would say, hey, folks, you have an administration that wants the country to become a greater export nation. Well, in order to do that, you need to have a currency that is weaker than what it is, to be competitive with China, to be competitive with India. And so you're going to have a weaker currency. So folks, if you're seeing the US dollar go down, that may not be a coincidence. And if you want to opt out of that, or if you want to retain the savings of your earnings right now, I mean, Bitcoin is in existence for that very purpose.
Right.
And so I would say that, hey, look at the other countries where they have volatile currencies and just take note. What's interesting is we're seeing all-time highs in the US dollar for Bitcoin, but say in Switzerland, it's not at all-time highs because the Swiss franc is a more stable currency and stronger currency. And so in other parts of the world, they're not seeing the Bitcoin all-time highs. So just be aware of that. And in terms of, I especially have been very keeping track in the Swiss region of the world. And in terms of regulation, it's interesting to see how that differs in different parts of the world. In the US, they have more of an approach where don't do anything illegal, but you can do whatever you want. But if we decide that it's not right in a couple of years, we're gonna punish you.
Yeah.
Which makes it very difficult for people who want to innovate, who want to build companies. And that's where you get into all the regulatory clarity issues. Well, what if I do this? Is that okay? What if I do that? And so that can be a risk and of itself, and very daunting as an entrepreneur. Whereas in Switzerland, it's more of the opposite. It's like you mostly can't do anything, but if you want to do something, you have to do it this way. And so I guess the regulatory clarity. So they have the benefit, the builders, the innovators there, of creating projects and trying to work with the regulators there. And if they get past that stage, they know they won't be punished retroactively, which is a comfort for many crypto entrepreneurs in the Crypto Valley Zug area of Switzerland and other countries where they have regulation in place like that.
Yeah, I mean, we're just kind of seeing some kind of guardrails get put in place here rather than what the SEC used to do, which was just punish everybody, seemingly. And
well, no, again, it was you can do whatever you want, but then until you can't.
Right. And we need those guardrails so people can know what constraints they're actually operating in, which provides a lot of that clarity and allows for innovation. Which kind of leads me to my next question. You've been in the space for a while. What right now are you most excited about for the next 5 years in the Bitcoin ecosystem? We're seeing the corporate treasury plays pop up everywhere. We're seeing the United States government seemingly embracing Bitcoin to an extent. What you're talking about, we're seeing them literally kind of bomb the dollar for a number of reasons. They want to be an export country. We want to bring down the value of this obscene national debt we have, which we can do if the currency is worth less. What's the most exciting development you've seen this year in the Bitcoin space that you're really excited about where that might take us in the next couple of years? Is it government regulations, treasuries, something else?
There's a couple of questions in there. And I mean, for me, what's always been interesting about Bitcoin is that it's electronic cash. And I hope to see that in the future, that it is a form of electronic cash that people regularly, daily in their lives, transact with to buy a cup of coffee, to go grocery shopping, and to buy their houses with. The narrative has changed since those days. It's more of a store of value or property, and that you can hold onto and lend against. And so that's interesting. But as we see, the corporate treasury adoption, more ETF institutional adoption, and now they're I just read something about how Coinbase and I think OKX, they're trying to get into make pension funds legitimate. And so you're going to see more retail adoption of that. So that's fascinating to me. I really just want to see the transformation of everyone from paper fiat money to digital money and see how that goes. I mean, when you think back through the eras of history, wouldn't it be fascinating to see and witness how we went from candles to electricity?
Yeah. Yeah.
And I imagine, the infrastructure isn't built for electricity, so people would be complaining, I like my candelabra. It's nice, it looks great on a table, it's physical. But, and I'm just conceptualizing, well, what would that be? Like, people probably would be annoyed they don't have plug outlets. But the infrastructure would keep building where, well, this just makes way more sense to switch on a light. And I feel that we are seeing that slowly evolved. I mean, I don't carry any money or cash on me ever.
You're good. You're in San Francisco. It's
yes, and exactly. San Francisco makes that a lot easier. And so just seeing that transformation for our era, it makes it a really cool time and place to be living in.
Yeah, absolutely. And it's just another example of when technology gets better and something proves that it's better than what they were using previously. There's always going to be slow adopters to the space. I was thinking of it as there was a time when horse, buggy, and carriage was the best way to go somewhere. And then they invented the car. And we slowly but surely adopted the car. And now we drive cars everywhere. So I kind of feel like we're in that inflection point right now in the currency space.
Yes.
Which kind of brings me to this question. There's a lot of people that are saying, Bitcoin's a store of value. It's digital gold. Then you have others like Jack Dorsey who will say Bitcoin cannot reach its full potential and become what we think it can become unless it's used as a medium of exchange. Do you think does it have to be one or the other? Does it have to be both? Can it just live as digital gold and still be worth $1 million one day? Or do you think we need to start seeing it used as a payment platform from a person to person?
I mean, it really is up to the community. I mean, I always thought it would be a form of electronic cash that would be more of a medium of exchange. But the community has taken in a direction where it's more of a store of value. I mean, I think it should have all three. It should be the unit of account, it should be the medium of exchange, it should be the store of value if you want it to be money. And I think that is the goal.
Right.
I think it'll head there eventually, and I think it's in the interest of the community to have it so. And so I think eventually it'll hit all three. And I mean, with Roxom as one of the first to list everything in Satoshis and in Bitcoin as the unit of account, I mean, that hits on the third prong. And so I think eventually it'll be headed in that direction, even though right now it's definitely a store of value, and that's the narrative predominantly winning.
Yeah, I actually have this theory that I just made up right now, but it's making a lot of sense to me. I think we'll know Bitcoin has fully arrived once we're able to see hip hop artists in videos flashing their cold storage wallets. Because you think about it, they have gold chains, they're flashing money. You need to be able to showcase your wealth in some way for rap videos. And I think once we're able
they've got the Lambos, they've got
the Lambos. Yeah, that's an extension of that.
They've got their NFTs, some of them.
But we need sexy cold storage wallets where I can show my Bitcoin balance or something. I need to be able to
take note. Yeah, they gotta create those. Ledger, Trezor, you gotta make those.
But maybe when Bitcoin's at $1 million, they'll figure that out.
Well, you got the cash.
We have the coins. Yeah, that's true. You could flip those out, but they need to actually be worth something. Otherwise, nobody cares.
This is a fake Casasius coin, people.
Yeah, I've convinced many people those are real. My little sister, she's like, "This is worth $100,000." She's like, "You're okay letting me hold this?" I'm like, "It's worth 20 cents. Come on." In terms of Bitcoin reaching this spot, though, this $1 million price target, which seems a lot more realistic now than it ever did. We're at 6 digits already. Do you think that it's going to happen in the similar fashions we've seen from previous cycles? We have the big run-ups and then the crash, and then we kind of consolidate. Big run-ups and crash. Or do you think we're at kind of this different phase now? Is it just going to be kind of a slow and unsexy move up and to the right because we have all this institutional money, we have more governments getting in play. How do you foresee Bitcoin evolving if and when it's to get to that $1 million mark everybody's always talking about?
Well, I mean, the market cap of Bitcoin is in the single-digit trillions, and if it's going to surpass gold, it'll be in the double-digit trillions, and so the path toward that is going to be volatile. But I suppose the good news out of that is that the volatility seems to be less and less going forward. So whereas we used to see 90% drawdowns, which I wouldn't rule out even now, I think that with time, those drawdowns will be lower and it'll eventually become more stable as the market cap continues to rise.
Yeah, no, I think you're right. I think we're going to see more of a muted up and downs than we had previously. It won't, I think it takes away a lot of the sparkle from the degens out there. I was part of that back in the day. You're chasing those big returns. But hey, if you could tell me there's a stock that's going to gain 30% year over year, any traditional financer would be like, put everything you have in that stock, right? So,
it's just the volatility. But I mean, that's another fascinating thing. You're witnessing the birth of a new asset class,
right?
And so it's a sun star. It's going to be massive volatility. It's going to be explosive. But then it's gonna be the sun.
Right. That's why early adopters win, right? You gotta have that conviction and show it, like Michael Saylor did back in 2020, and he is winning big right now, really big. Speaking of which, they are now eligible to get put into the S&P 500. It could happen as early as I think at the end of this week.
Congratulations, Michael.
Yeah, good job, Michael. How significant of a moment do you think that is for Bitcoin's legitimacy in the eyes of traditional finance?
Oh, huge.
Right?
I mean, it was Warren Buffett who said it was rat poison. You still have JB Diamond who's a hater. But also, in the opposite, they're the same kind of folks, like cut from the same cloth as the Michael Saylors.
Right.
They are people with a vision,
Yeah, they do.
their own narrative, and they're just going to continue saying it, no matter what the actual reality is.
Right.
They're going to continue saying it's rat poison, it's not going to work, because they are the same type of dude. They are just going to will things in their view of what should happen. And so we're going to continue seeing that in the future. And remind me, can put me back on track of what you're asking.
Oh, no, I was just asking how, because you've kind of bridged that world from traditional and this, crypto ecosystem. I'm just wondering, from your eyes, how big of a deal is that in terms of validating Bitcoin to traditional finance?
and so it will continue to prove the naysayers wrong. And as greater adoption continues, it just gives further a win for the Bitcoin community and that narrative of that this is going to be a new asset class that will be used for a store of value in this case often, and perhaps hopefully as a unit of account and medium of exchange. And so it just certainly underlines the legitimacy of of Bitcoin.
Yeah, and then you combine that with what we're seeing from the United States government this year, right? We got Trump saying he's going to be the crypto president. We're going to be the crypto capital of the world. We have this supposed Bitcoin strategic reserve that's happening. But then there's also have all of this involvement with the first family, right? You have Trump started World Liberty Financial, and there's Trump Media, and there's Trump tokens. There's a Melania coin. How do you feel like he has been for the industry? It feels like there's a lot of good things, but then there's a lot of this tomfoolery that I feel like is going to keep a lot of detractors in that same seat. Because they're like, look at what's going on. This is a horse and pony show out here, but we're talking about people's lives and real money. How do you feel like Trump's done so far since he's been in office in terms of pushing the Bitcoin narrative forward?
I mean, it's night and day.
Yeah.
I mean, we had the Biden administration and Gary Gensler as the chair of the SEC back then, and the mood was stifling of any innovation and any growth in the United States, and people were moving out of the country, setting up in jurisdictions where they felt more comfortable, and the regulators wouldn't get to them, to now where we have a Bitcoin president. And so for the crypto industry, at least, I mean, no one can doubt that Donald Trump has been exceptionally wonderful for the crypto industry. And the fact that he has been involved in these questionable projects where he is personally, or his family and related entities are personally benefiting from questionable projects. I mean, I've just seen many folks in the industry turn a blind eye
It feels kind of illegal.
Because,
a little bit.
well, yeah.
I mean, Pelosi feels kind of illegal though too. She's like the greatest stock trader of all time.
Again, that's the whole thing in the U.S. You can do whatever you want, but later on it might be illegal.
Right.
And so, as he's president, I mean, it's going to be legal in the current term.
Right.
And in terms of the future, who knows? But yeah, he is very much a proponent of the crypto industry and profiting from it. And a lot of the folks in the industry love him for that and turn a blind eye to these other crypto projects he has. Except for Anthony Scaramucci, of course, who will always call it out.
Love the mooch. Yeah, he's a bold man. I like him. He was fun when we had him on the show a couple months ago. All right, so we got to wrap things up here, Christine. But before we do, one final question we'd like to ask everybody. So Eric Trump came out, Bitcoin Asia, said Bitcoin's definitely going to $1 million. For fun and games, what we like to do is here, we like to ask all of our guests, by the end of this year, 2025, what do you think, this is just for fun, the price of Bitcoin will be by the end of this year? And whoever gets closest, I'm going to send to Roxom Patagonia too. So who do you think? We've had quite a few guests. I know we've had 200,000. We had someone Price is Right at 200,00001.
Oh, this is like the Price is Right.
This is just like the Price is Right. Yeah, that's right. I think we had 140.
You're Bob Barker, okay.
Yeah, that's right. Yeah, let's get a little mic here. So what do you think? If you had to put a guess on it to enter you in the contest,
Okay.
what is it? What are we at the end of the year?
All right. Okay. So if we want to go super bull, it would be 250 Tom Lee style fun strat.
Yeah.
If we want to be more conservative or moderately bullish, I'd say 180 in the vein of I think Bitwise maybe would make that estimate.
Matt Hogan.
Yeah. So it's a 110 right now. We're in September, which is usually a down month, and December, which will usually rip.
Yeah.
I'm gonna say 130.
130. All right. We got Christine on the board for 130. Put her up there. Yes. Great. I like that. It's more on the conservative side, but Bitcoin never does what you expect it to do, right? Like everyone's thinking it's going to rip in Q4. I think we'll see some gains and new all-time highs, but I like your bid. So we got your 130. Perfect. We'll keep honoring that. All right, Christine. It's been an absolute pleasure having you on the show with us today.
Thank you so much, Hank.
For sure. Before we let you go, though, I'm sure there's plenty of people in our audience who are like, man, this Christine knows her stuff. What's the best place they can go to get more information about what you're up to, whatever takes you have of what's going on in the industry? Where can they learn more?
Go to Twitter, X, Christine News. Follow me at Christine News. Thank you so much.
That's a great handle. That's a great one. It'll always be Twitter to me. It'll never be X. All right. Well, that's it with Christine. We'll be right back with more Blockchain Report right after this message. All right, and we're back with more of this morning's bull run. And another day, another Trump family side hustle. This time, it's Bitcoin mining. We, of course, are talking about American Bitcoin, which hit the NASDAQ under the ticker symbol ABTC. And yes, it's backed by Eric and Donald Trump Jr. Because apparently running the White House wasn't enough, they now want to run the blockchain as well. American Bitcoin is a joint venture with Hut 8, another Bitcoin mining firm. To speed this whole thing along, the Trumps and Hut 8 pulled an all-stock merger with Griffin Digital Mining. They also raised $220 million by selling private stock. Eric Trump is out here pitching American Bitcoin as a Bitcoin proxy. He told Fortune there's no doubt about it, which is hilarious because the only thing people have less doubt about than Bitcoin is the Trump family's ability to monetize literally everything they touch. And make no mistake, this isn't their only crypto fling. The Trump family empire now includes a cryptocurrency, a stablecoin, meme coins, NFTs, multiple public companies, and even a forthcoming crypto lending app. Critics say the sprawling empire is basically a way for influence peddlers to line the 47th president's pocketbook. Eric Trump denies it, saying he doesn't talk to his dad about business ventures, which, if true, makes him the first Trump child in history to avoid family dinner table business discussions. But hey, American Bitcoin is live, the ticker is ABTC, and the Trump family's crypto tentacles just got a whole lot longer. Because who needs separation of money and state when you can trademark both? And quantum computing could break Bitcoin in as little as 3 years. Yikes! That's according to Hunter Beast, author of Bitcoin Improvement Proposal 360. Yes, the man literally writing proposals to make Bitcoin quantum resistant is now waving the red flag. Beast said something has changed recently, though he wouldn't say what. Apparently, new techniques have been discovered that could make Bitcoin hacks feasible. And while most analysts dismiss quantum threats as sci-fi, Beast says the clock is ticking. His words, "I don't think we have as much time as I once thought. I don't want to be an alarmist. Worst case, 3 years." He clarified this isn't fear-mongering. He called it a kick in the pants to work harder on protection. Quantum computing, with its freakish processing power, could theoretically crack Bitcoin's encryption standards. And that's the nightmare scenario Beast is trying to head off. He's not alone in sweating it. Vitalik Buterin chimed in saying there's a 20% chance quantum methods could break Bitcoin encryption by 2030. And El Salvador has already reacted by moving its national Bitcoin reserves to new addresses to shield them from possible quantum attacks. So while most people worry about inflation, regulation, or Peter Schiff tweets, some developers are out here literally fighting Skynet. All right, it's time for a little bullish, bearish, or BS where we wrap up today's show. Let's run the stinger, boys. All right, let's recap today's top stories, a little bullish, bearish, or BS, and see how things are looking for Bitcoin. First up, American Bitcoin, that joint venture between Eric Trump and Don Jr. and Hut 8 is officially trading on the NASDAQ under ticker ABTC. I am bullish on this. I mean, a Trump-branded mining company on the NASDAQ means more institutional eyes on Bitcoin, baby, which means more money, which means number go up and to the right. I'm all for it. Bullish. Next up, we got Coinbase announces a Frankenstein futures product stapling Apple, Tesla, Nvidia, and other big tech names to Bitcoin and Ethereum ETFs in one equally weighted index. Oh, I'm bullish on this too. This is Coinbase forcing TradFi investors to accidentally buy Bitcoin exposure while they think they're just betting on Apple. More exposure, higher prices. I like it. Good momentum. Too bullish. One more story to go. Last but not least, Hunter Beast says new techniques in quantum computing could theoretically crack Bitcoin encryption as little as 3 years, though he frames it as a call to action, not panic. Ooh, I'm going to call it BS with the side of bearishness, okay? I mean, yeah, quantum risk is real, but right now it's sci-fi hand-wringing. Developers are already working on quantum-resistant upgrades, and in the meantime, Bitcoin adoption and price action won't be slowed by boogeyman headlines. So, today's final tally, 2 bullish, 1 BS, which means today's overall sentiment is bullish. Yay! Feeling good. We got Trump family doing more stuff to push adoption. We have quantum computing threats. I don't totally believe in it. Today's feeling like a bullish day overall. As always, thanks for tuning in to the Blockchain Report. If you haven't already, make sure to like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV for more Bitcoin bedlam. Until then, I'll see you boys and girls tomorrow. Sayonara.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
The future of capital markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
I mean, with Lightning, you still have to transact with the layer one to open and close channels, to move funds in and out of Lightning. And it's not like we're going to move all Bitcoin into Lightning and then no one's ever going to, go touch the layer one again. The ways that those two interact and like the long-term experience of them will evolve. It's not a valid kind of criticism, I think, to think that Lightning is going to really, really harm miners ultimately, because it only helps them. And it gives users also the same way of transacting in these new categories, as well as, when the chain's really congested, they can still get their smaller payments in there.
Guys, welcome back to another show. Today, I'm here with Graham, which is CEO at Voltage. How are you doing today?
I'm doing great. How are you doing?
I'm doing fantastic. I love our ping pong off camera. So those are my favorite moments, just for you and me, right? Thank you for the good chat. But for those people that don't know you, do you mind to give us an intro and tell us a little bit about yourself?
Yeah, absolutely. Yeah, so my name's Graham. I'm founder and CEO of Voltage, and Voltage is a Bitcoin Lightning infrastructure provider. So we help companies incorporate Bitcoin, most specifically the Lightning Network, into their products and services. Before I started the company, I was doing a lot of software engineering early into the Bitcoin space and did a lot of Bitcoin development as a hobby, just in kind of my free time, developing out projects, helping with Bitcoin Core, that kind of thing. And every time I started a project, it was really hard. You had to start from ground zero. You had to build up a Bitcoin node or a Lightning node. You had to create all these channels. You got to do all this stuff. And it was just a big hurdle to even start working on a project to incorporate Bitcoin into it. And so I wish that I had a provider. I can just have an API, just hit the API and start, sending payments, doing all this stuff. And that really just didn't exist at the time. And so that was the first kind of idea I had for Voltage, is create a provider that is a really simple, easy way to integrate Bitcoin and Lightning into what you're doing without having to hire a team of people that are experts in Bitcoin, without having to stand up all of the infrastructure, do all of these things that are inherently just really hard and would prevent the adoption of Bitcoin and Lightning ultimately from more companies. And so that's what we kind of set out to create. Now our platform is, we have customers all over the world, being able to just really simply hit an API and have that instant, experience of adding in Lightning into your products and services. So really excited for what we're doing. I think Lightning is in a really great spot, which we're going to dive into today. And I'm just excited to continue to help move the adoption of Bitcoin as a means of payment into the world.
Fantastic. I'm so excited you're here today, because sometimes, it comes out with my guests and some of the guests are saying, oh, Bitcoin is not Lightning, they're different things. And is Bitcoin really scalable?
Yeah, I think ultimately it depends on kind of what Bitcoin is very unique for a couple reasons. And that one, it's really the first kind of money that exists that is both a good store value and a good means of transacting, a means of payment, medium of exchange. You think about other alternatives like gold is a decent store value, not very good on the transaction side. Paying with gold, just no one does that today. Similarly, fiat, really bad store value, but it's easier to transact with in a day-to-day basis. Bitcoin is the first one that is actually a good store value and a good medium of exchange. And so kind of catching people off guard and which one is it? How can you use both of these at the same time? And ultimately, it can do both of those, and it can do it well. It can scale very well in both of those scenarios. You think about the blockchain itself and being able to, process transactions, have the security long term and all of those things, which is certainly there. And then Lightning comes in, and it is a means of actually really fulfilling the idea of Bitcoin as a means of payment and leveraging it as a payment rail, faster and cheaper than any other, network in the crypto ecosystem that you can transact value with. So it is very scalable, both from scalable from the store value standpoint, as well as scalable from the medium of exchange. And I think that the Bitcoin layer 1 really helps in the store value aspect, and then the Bitcoin layer 2, which is Lightning, really helps in that transaction side.
How can something be a medium of exchange if it's not a store of value, right? It doesn't make sense to me. Before we have to collectively, that's my opinion at least, before we have to collectively agree, okay, it has value, great. So now how do we exchange it? It's part of the evolution, I guess, of an asset.
Yeah, definitely. And I think that there's people say that, fiat is a store value. It's just a bad one. It's just one that is, inflation is decreasing over time. It's it has a lot of bad properties to it. So fiat is one that that does accomplish both of a store value and a medium of exchange. It just does one of them really badly, and Bitcoin's the only one that does both of them, and it does both of them well.
Not long ago, I had kind of a debate on my channel, and it was Kaspa versus Bitcoin. Two parties, they exchange some thoughts. So what happens when, the last Bitcoin is going to get mined, and all sort of rabbit hole we felt into it. But I love Lightning Network. I use it daily, to be honest. Do you also agree that it's a layer built on top, but whoever participates into those nodes, they are not actually contributing to the layer 1, if it makes sense?
Yeah, I think it's an interesting point, but I definitely I guess disagree with the fact that it is, it's harming Bitcoin in that, okay, those fees aren't going to the miners for sustainability and things like that. With Lightning, you still have to transact with the layer 1 to open and close channels, to move funds in and out of Lightning. And it's not like we're going to move all Bitcoin into Lightning and then no one's ever going to, go touch the layer 1 again. That's never going to be the case. And so there's always going to be, Lightning using the layer 1 Bitcoin to go in and out of the network and ultimately, settle up with counterparties. We're going to be touching the chain frequently. And so for that reason, anytime that goes, in and out of Lightning, it pays those miners. So it does sustain them in that way. It still pays fees. It has all of those things. Additionally, like Lightning has, a lot of more unique properties of you can do things like a one-set payment inside of Lightning, which are just totally uneconomical on layer 1. You can't do that because of dust limits and the minimum transaction sizes that exist around dust. And so there's a whole set of like a kind of category of transaction that could never happen on layer 1 that also Lightning enables. And you have to pay that miner fee to create the channel to then be able to process those payments. So it's kind of opening up a new category that would have never existed on the layer 1 anyway. And so I think with like both of those, like being able to like, I think people think that when they think of like Lightning being off chain and like those fees not ultimately going to the miners, they do like, it's kind of like imagining that eventually all Bitcoin transactions will only be in Lightning. We're going to put, 20 million Bitcoin of the 21 million into Lightning, and they're just going to stay there and never leave. That's not really going to be the case. People will still use the layer 1 cold storage, maybe like, billions of dollars in a single transaction, that kind of thing. And so people will still use the layer 1, and people will be coming in and out of Lightning consistently that still pays those miner fees. So I think it's like it's not a valid kind of criticism, I think, to think that Lightning is going to really really harm miners ultimately, because it only helps them, and it gives users also the same way of transacting in these new categories, as well as when the chain's really congested, they can still get their smaller payments in there.
From my ignorant perspective, because I don't know much about Lightning Network in details, I mean, philosophically speaking, you could say it's evolving, right? This is the decentralized network. Like, how could you imagine that, this is not going to change, right? I mean, it's not changing per se, because it's still 21 million, it's still decentralized, it's still divisible, transportable. Those are the properties at the core of the network, but of course there's going to be things built on top of it, right? So it would be like saying, oh, the email is not part of the internet because it's SMTP and it's not HTTP.
Yeah, I mean, I think that there's definitely like some validity there, and just like ultimately, like I think that that's also something that people fall into like a kind of a bad trap in, that thinking that the way that Lightning exists today is the way that's always going to exist, or even Bitcoin layer 1 is going to always exist the same way. There's some properties that are going to stay there for sure, but it's like the ways that those two interact and like the long-term experience of them will evolve, like especially on like the Lightning layer and things beyond. Like there's a lot of protocol enhancements to still go inside of Lightning that that are kind of known, that people are working on and developing out. So like to think that something is stagnant in the way that it exists today is like a very ignorant way of thinking, just like the internet in those early days of like, okay, the way that you had to use email was you had to run your own SMTP server. Now we don't, no one does that, or not a lot of people do that. And so I think that just looking at the evolution of how these things evolve based on usage and the adoption, the same thing's going to happen here.
God knows where Bitcoin is going to be in 100 years from now. Like we are pulling forward an issue that is not even on the table. I mean, at least that's how I see it. I don't even think about it. So to me, it's more like a way to sell a coin, saying, hey, Bitcoin has this problem that we don't even have, by the way, and we will face it in 150 years, but we have a solution. It's called whatever. In this case, was Caspa, whatever. But I'm sure there is going to be many more others trying to conquer the proof of work, which is, I thought it was fascinating. But yeah, thank you for giving me your perspective, because I was like, I don't get it. I don't see it as a problem.
Definitely. And it's still Bitcoin at the end of the day. And I think that that's something like you're correct in that a lot of people that have criticism about, Bitcoin on the energy usage or like the miner sustainability or Lightning and like all these things, they usually have an ulterior motive. They have some other thing that they're trying to push to, get more adoption of their own chain or their alternate Bitcoin layer 2 or whatever it is. And so most of the, you got to really take a lot of that with a grain of salt, because most of the time it's not even a real problem or a real issue that they're talking about. They just want this other thing, the other thing that they're making, to be successful. And so, the way that is they try to attack Bitcoin. And so it's kind of, we've seen that for years and years and years now. So it's nothing new from the standpoint of people trying to kind of make up problems inside of Bitcoin.
I would like to know, of course, with Voltage, you guys have done so much work and development. Is there a pattern from someone, let's say a client who comes to you guys and they want to use the infrastructure? I'm sure there's going to be a percentage of people, they maybe don't have much exposure in Bitcoin. Have you kind of found a pattern or some of the most common fears or misunderstanding they have when it comes to Bitcoin?
Yeah, I mean, definitely. I think that we have a lot of customers that fall into that category, as well as people that like are maybe familiar with Bitcoin, but they aren't familiar with Lightning. Like they kind of have never kind of crossed that bridge and really done the research on what Lightning is. And so there's, naturally a lot of questions, around like the security, like how does it work? What do we do in like X, Y, and Z kind of scenarios? And so it's, there's usually a lot of education that goes inside of those people. I'd say that's the vast majority of our client base. We have, I would say it's a diminishing amount of customers that already understand Lightning. They know exactly what it is, how it works. They just want to, get a provider, get an account, and then go. Most of them are like, we get demand from Lightning from our users, or we heard about it and we want to get the advantages of it, and we want to like understand what the opportunities are here. And so that's something we do a lot with our clients, is educate them on what is Lightning, how is it different than the Bitcoin layer one, because it is quite different from like the invoice mechanisms. It's not like just a static address. You get like with these one-time invoices and channels and all these different things that are very unique to Lightning. And so educating on them on that. And then we also are doing more and more in kind of the fiat space, or like traditional fintech companies that maybe only do dollars. They've never touched Bitcoin at all, and we have more and more services to help them like kind of on off ramp from like US dollar into Bitcoin and so on. And so being able to help both explain Bitcoin, the network, and Lightning, all these things from kind of the lowest level. And most of these people are starting to use Bitcoin and Lightning for the kind of the rails to move the money. Maybe it goes from dollars into Bitcoin, gets transacted, and then it goes from dollars to pesos or something else on the other side. Talking about how does that work? How does Bitcoin work? And why is it secure? And the best way of moving that value is something that it just takes some education on. And most people are very receptive. It just takes kind of, you got a lot of questions generally of like, is this really secure? Does this really work? And once you kind of break down those barriers and then show them the proof of actually transacting, sending these payments, doing all of these things, then it kind of the light bulb goes off for them of how impactful it can really be. We have customers that are settling payments in less than like half of a second, like close to a quarter of a second. And to be able to do that is like not really possible or sensible in pretty much any other system. And so to be able to show them that and them have the value is like really eye-opening for them.
Every time there is a new technology introduced, there is a learning curve, right? People have to go through.
Yeah.
Sometimes they just even fight against it, like internet itself. Like I remember the press was, this is it's never going to work. It's too slow, and you can't use the phone at the same time. It's too expensive.
Yeah.
There is always there's always some friction in Bitcoin. We are at the same spot. I mean, I guess now it's been 16 years. If you don't know what it is, you're probably living under a rock. Maybe you don't understand exactly what it does, but I'm sure the name is going to ring a bell, right? And things are always the same. It consumes energy. Okay, but compared to what? I mean, banks are not consuming energy. Digging gold is not consuming energy. Moving gold, storing gold. How far do you think we are from kind of finding the Lightning Network specifically, because it's going to solve so many issues, maybe through allowing you to pay, I don't want to say Amazon, because that would be a huge thing, but maybe kind of starting to propagate throughout, some platforms that deal with e-commerce, or seeing that button pay with sats or whatever. Are we 20 years away? Are we 6 months away? How do you feel about it?
What you said earlier is like definitely correct. And like, the evolution of technology, and we're like, I think just kind of coming out of like the broadband area where it was like, you can't use the phone and the internet at the same time. And it was really weird. And, people were like, this is never going to work. Well, and then those problems got solved over time. And now here we are with the internet is like everywhere. The last year of Lightning has really been in more of that breakout moment. Have we seen some of the biggest exchanges in the world supporting Lightning? We have like Kraken, Coinbase, Binance, Bitfinex. Like the vast majority of these larger exchanges are either have support for Lightning, or they're looking at it in the next 6 months. And so I think that has really spoken to the adoption coming, where like first we're starting to really take over the crypto space. People that are doing, whether it's Bitcoin or any other altcoin or whatever it is, doing more volume on top of Lightning, adding it in and things like that. We're there. That's happening right now. And then looking, the kind of the next space out is more of that traditional, fintech companies starting to leverage it. And then, ultimately going into like, Amazon, Apple, Google, and that are, these gigantic tech companies. I think that we are starting to see that evolution happen. There's people, there's larger companies that are in the kind of fintech space that are certainly looking at, Bitcoin and Lightning and how can we leverage it. Things like cross-border payments and all of those kind of things that like it really works just incredibly well for. it's like the existing system is also so incredibly bad at it. And so there's kind of like this big divide that can really, we can do a huge leap forward by leveraging, Bitcoin for some of these like cross-border use cases and whatnot. So, I mean, I think that that's coming. We see people actively looking at that now. And I think that, in the US, the new administration has been much more friendly from the government perspective than the previous one. And so that's really kind of bootstrapped more people being like, okay, now we can start to look at this more seriously. Now we can get our hands dirty, because before they were under fear of like being getting in trouble, in some way, shape, or form for actually like starting to integrate or test it or anything. Now it's like, okay, we can at least explore what's possible here. So that's coming. I don't want to put like a date on it of 6 months, a year, 5 years, but like we are starting to see those companies, like the fintech companies, looking at it now of like, how can we leverage this? What are our options? And I think that that's going to continue to evolve over the next several years. And really, those companies are historically slow to move, and that, something innovative is like great. They want to explore it, but then they want to roll it out in a very controlled way over time. But I think as soon as those start to happen, it starts to accelerate from there, where it's like, okay, as soon as, bank X does it, okay, now bank Y is going to do it, and so on and so forth. And it really kind of cascades down from there. So still take a little while to get to that full kind of broader adoption, but it's happening. That flywheel is in place.
You read my mind, because I wanted to ask you about, of course, the new administration pushing and changing things, like you said, because it's going to have an impact. I mean, Trump hasn't even done his first year, so it's super early days. I don't think he's priced in yet. I don't know if you agree.
Yeah, I mean, I agree. I think that we definitely have. I think that some of the like the hype, the hope of like, continued adoption and a lot of these things that you just mentioned is, that's part of the reason why we went above 100,000 from the price perspective. But there's still a lot more to go, I believe, both from like, the price, but this adoption, and like it still feels early from like what is possible and what, is still yet to be done. Because like you said, we're just less than a year of this kind of new regime of being just less hostile to the crypto space in general. And so I think there's still a long way to go in positivity from being able to build out, new technology and, price appreciation, all those different things. And I think that, people like Apple is like, it's you already see some like very, very small movements of like, I think that they allowed like, games on their app store to like incorporate Bitcoin or like charge users. It was something around like allowing more kind of Bitcoin experiences inside of games in the app store. That's just that's just a small little tidbit of them like, starting to hint at like, okay, this isn't bad. Like we aren't against it. And then maybe, over time they start to inch closer and closer and closer. And so those are kind of the underappreciated, like, Bitcoin's not going to explode in price because Apple did that, but it's like these little things that are chipping away at this adoption that is going to just continue to happen over time.
It was 2023 when Bitcoin was trading at $16,000. Like, I mean, if you stop for a second and look what he has done in the span of a few years, the ETF alone, like BlackRock, has been the fastest in history. I discuss it sometimes on my podcast, and people are saying, oh, the ETF is not Bitcoin. I disagree. I think the ETF is a vehicle, is a channel for people to acquire whatever. Who am I to say, BlackRock, you can't buy Bitcoin? I mean, it's supposed to be a decentralized network. Like, how am I going to be choosing who participates? Well, then it's not decentralized, then it's fiat. We already have that. Like, the idea is to allow anyone to chip in if they want, right?
Yeah, no, I definitely agree. Of, as soon as we start saying, Bitcoin's for everyone except for like those people over there or those people over there, it's like, well, we kind of lost the story of what we're trying to do here. A couple things like the ETF, like I think that it was the most successful launch of like an ETF to date. And I think that just shows there's demand. Like there is so much demand for Bitcoin that like, there's a lot of, organizations out there, whether it's hedge funds or, investment advisors, like all kinds of different organizations that were never allowed to like buy Bitcoin directly. They couldn't buy the asset itself, but they can buy the ETF. And so I think that is one of the reasons why it's so successful is there's so much pent up demand that couldn't buy the asset directly that can buy, the ETFs. And like, yes, it's not like, true cold storage sats in your wallet, but like for those people, it is enough to get that exposure. And that's why we see it being so successful, is that there's just so much demand for it. And, the data is there. It shows that like that exists. And I think that will continue to exist, especially as like, another policy thing is like allowing things like Bitcoin and other assets to go into like 401ks in the US. And I think that continuing to like basically kind of normalize it as it's just another diversification mechanism for investment, whether you're like the hardcore Bitcoiner that is like, I want, 90% of my wealth in Bitcoin, Bitcoin, or you're just the average person that, hey, I want a 5% exposure. I just want something to start the flywheel of Bitcoin accumulation. And it's kind of the perfect vehicle to have that entry point. And hopefully it's the Trojan horse that ultimately gets people like, okay, I've had the ETF for a year. Now maybe I want to go and like actually buy like the real thing, look into self-custody, look into like cold storage and things like that. And so, maybe that's not everybody, but I think that hopefully that continues to build that flywheel and get people more educated on it. And I think that's the biggest thing. People around the world want access to Bitcoin, and this is just another way of giving them access. And I think it's proven to be very successful.
There's going to be a conversion of someone who's gone into an ETF or whatever, maybe a treasury company or an investment into whatever it is connected to Bitcoin, and then down the road is going to convert into self-custody, into a metal plate into their garden with the seed phrase stamped into it. Mm-hmm. But I don't think it's for everybody. Like, I speak to a lot of people, and sometimes they say, I don't want I don't want the responsibility. Like, I want someone else to be accountable. And I'm okay in having a IOU in fiat. Hey, I respect that. Like, as long as my problem will be whenever they will forbid me to have self-custody. If there is a market of people, they want to buy something, let them have it.
Yeah, I totally agree. And I think that is something that is also like one of the great parts about Bitcoin is you can choose how do you want to interact with it. Do you want to do the ETF version, or do you want like, okay, I want, cold storage, I want my metal plate and all of those different things. And you can do both. You can do one, like one doesn't hurt the other. And so as long as we have the ability of always, having the optionality of self-custody, then people should be able to choose like how they interact. And it's also like there's different areas of the world even have very different options for like, if you're in Africa, like you don't have the same financial system that we do in the US and all of these different things. And so it's really, people got to figure out what makes sense for them in their place, like, in the world, and what their current financial situation is. And so the number one thing that we can do as an industry, as a community around Bitcoin, is just give optionality. The best thing we can do is just give them the different options for what makes sense for them. And, I think prescribing of like, you have to do it this way or that way is just so short-sighted and just not really considering the world outside